So the months given are month 1, month 2, then we have month 3. We have the details about sales. The total sales amounts are given for all the 3 months, month 1, 2 and 3. Then what percentage of it is cash percentage? 20% of it is cash percentage. So let's write first cash sales. So 20% of that will be received immediately is equal to 105,000 into 20%. Then we have 120,000 into 20%. Then we have then the credit term details are 80% of the sales are on credit. Credit customers paying within 1 month and are given a discount of 1.5%. So those customers, if they pay within 1 month, they are given a discount of 1.5%. But out of the credit sales, only 40% of the credit sales are paid within 1 month. So those that pay within 1 month can also avail a discount of 1.5%. So first we need to check out what is the credit sales amount for each month. Of that, only 40% of them will be paying, and the ones who are paying will pay 1.5% less because on account of discount. So that part we have to include into the calculation. So let's see. So if we are talking about the first month, so first month 20% will be collected here. So let's talk about month 1. Month 1 sales, if we are talking about month 1 cash sales are anyway received here. Then talk about the credit sales. Out of the credit sales, a part of it is collected in 1 month, another part of it is collected in the second month. So first month, the remaining 80%, we are talking about the remaining 80%. What are the sales of first month? First month sales are 105. Out of that, the credit portion is 80%. Okay. Out of that, we see that 80% of that, out of that, are all of them paying the amount? Not all of them are paying. Only 40% of them are paying within the first month. Plus, they are availing a discount of 1.5%. So 1.5%, if it is deducted, how much would be 98.5? No, so it will be 98.5%. So that is the amount of cash which would be collected. So that is what is the amount collected within 1 month. Within 1 month, in the same month. The next month, the rest of them will pay. The rest of them will pay in, as 105,000 into credit sales are 80% into, see, 40% already paid in the first month. So 60% of them are there. Out of 60% of them, 2% will not pay. So 58%. So 58%. They will pay in the next month, within 2 months, no? So the next month. This is the amount which will be collected in the second month. Coming to month 2 sales. Month 2 sales, 20% of them are cash sales, which is received here in month 2. Coming to the credit sales part of it is equal to 120,000 into the credit portion is how much? 80% into 40% of them avail the discount into 98.5 percentage. Okay. Then comes the balance of it is equal to 120,000 into the credit portion is 80%. Of the 80%, 60% should be paying in the next month, but out of that 2% is bad debt. So only 58% of that will be paid in third month. Coming to month 3. Coming to month 3, 20% in the same month as cash sales. Out of the credit sales within 1 month, so that would be is equal to 108,000 into the credit portion is 80% into the payment is for 40% of the credit portion into 98.5% of them of the cash amount will be collected. So these are the cash collections. So month 3 it will fall into month 4 also, but we are not looking into that. So the total receipts expected in 3 months, these are the amounts which would be expected in 3 months. Add them up and we would have these amounts in this particular fashion.
Ma'am,
yeah,
I did not understand month 3, for month 3, month 2's collection and month 3's collection for credit sales. I did not.
month 1,
Month 1 I got it.
month 2.
No, ma'am, for month 3, yes, ma'am, in that column, I did not get the credit sales collection for month 2. Ma'am, over here you have written, what is that? 120,000 into 80%, which is the credit figure. Ma'am, but 58% will pay in the second month now, ma'am. That means that they will pay in the fourth month, month 4. They won't pay in month 3, no, ma'am. Only within 1 month, so 40%. Ma'am, do you understand my question? Ma'am, because what is that? 120,000.
Within 1 month, within 2 months is, within 1 month is the same month, within 2 months is the next month, no?
Yes, ma'am, but it's not within month 2. It's the, I think they have like, this is the time frame we are talking about. So if in month 2, for month 2, you have to receive this much. Within month 3, they'll receive 40%. And then in month 4, they will receive the rest of the 58%. So shouldn't month 3's month 2 collection be 40%?
You mean to say we need to drag it like this?
No, ma'am, that's not what I'm saying.
Is it like this? Dragging like, is it this particular fashion?
Ma'am, something like that, but I don't think. Yes, ma'am. That will go to month 4. Yes, ma'am. Ma'am, so is this how you do it, or did I misunderstand something?
80% of the sales are on credit within 1 month. So it says within 1 month. No? So in the same month, no? Within 1 month is the same month. Don't you think so? Credit customers paying within 1 month are given a discount of 1.5%. So it's not in the next month.
But if it's within 1 month, that means they pay in the next month. Like the time period of 1 month will pass and then they'll pay.
No. Then they would specifically mention will pay in the next month. If it is within 1 month, so general assumptions here in case of cash budget will be the sales are always made on the first date unless and until something else is specified. So as on the first date, if the sales are made, then if it is paid within that same month, so that is to attract the customers to make the payment within the first month. They are offering a discount of 1.5%. If it extends into the next month, no need to give any discount offer. No? That is how the assumption goes ahead. So that is how we take that into consideration.
And so 40% of the credit sales will happen within the same month that it's budgeted for.
Okay. I plus there is something else also. Outstanding receivables at the beginning of month 1 include 6,000 expected to be received during month 3. So apart from all these things, we also see that there is another cash collection from some outstanding receivables. So let's take it as outstanding receivables. This will be 6,000. Okay. Time frame. One month after the sale. Okay. This is how it has to be calculated. The terms and condition of the transaction will fall like this. So this would be stepwise. The stepwise the calculation will be accounted here in this particular fashion. After 110, 111 we can't do now. Yesterday did we do 112, 113? Did we do 112 and 113? I think so. No, we didn't do. 108 was the last question. No, we've done 112, 113 also. 115. Let's take this one. 115. Question number 115. AB is preparing its cash budget for next year. The accounts receivable at the beginning of next year are expected to be 460,000. The budgeted sales are 5,400,000 and will occur evenly throughout the year. 80% of the budgeted sales will be on credit and the remainder will be on cash sales. Credit customers pay in the month following sales. Pay in the month following sales. The accounts receivable at the beginning of the next year are expected to be 460,000. What is accounts receivable? The uncollected amount from sales made is accounts receivable. The due amount, the receivables which are which arise because of sale happening on account. On account is on credit. Because of credit sales, any amount which is to be receivable is called as accounts receivable. So if it is at the beginning of the next year, it is at the end of the current period. And the total amount is 460,000. The budgeted sales are 5,400,000 and will occur evenly throughout the year. 80% of the budgeted sales will be on credit and the remainder will be cash sales. Credit customers pay in the month following sale. The budgeted cash receipts from customers next year are so the budgeted sales are 5,400,000 and if they occur evenly throughout the year, per month how much will be the sales divided by
12.
12? So evenly throughout the throughout the year. So per month sales is what first we need to calculate. And 80% of the budgeted sales are on credit and the remaining will be cash and the entire amount of credit sales will be collected in the next year. So these are the terms. And if they are 460,000 in accounts receivable, that will be on account of credit sales which happened in the previous month. 460,000. First calculate what are the monthly sales. Let's start with that.
Ma'am, we cannot see your Excel sheet.
What happened?
Can't see your Excel sheet. Yes.
The accounts receivable at the beginning of the next year expected to be 460. So 460 will be received in the next uh, year. Evenly every month it would be the same amount of sales, and every month 20% will be received and 80% will be received in the next month. So if we take from the period from 1 to so on till 12, so one will for the first month 20% here, 80% here, second month 20% here, third. So like that 12th month 20% here and 80% will go to the next period. Only 80% of the credit sales of month 12 will go to the next year first month. But the rest of it, from starting from first month until the 12th month, every amount, every month's amount will be collected in the same year. Okay, the question is asking for the next year, so one full year is considered. So first month 1 plus 2, a part of it is received in first month, the remaining part in the second month and third month sales, third month and fourth month, so on. 12th month sale, 20% will be received in the same month. Only 80% of the 12th month sales will be received in next year first month. That is from sales. Now, how much is that? 80% of the sales, 80% of the sales is 360,000. That will be collected in the following year's first month. Okay. Then they have at the beginning of the period accounts receivable of 460,000. That also will be received during the year. Fine. So then all through the year, the total amount is 5,400,000. All of that except 360,000 will be collected. So that is how we calculate what is the cash received from the customers. Beginning accounts receivable. Beginning accounts receivable will definitely be collected during the year, which is 460,000. Then sales of next year also will be collected except 80% of last month's sales. Except this, all the other things will be collected during the period. So here we can put this one as the year sales are 5,400,000. 5,400,000. Then minus 360 or 360,000. 360,000. So the total amount which will be collected 5,500,000. question number 120 is, I said we'll take it up tomorrow. 121, let's take it up. It says AB is preparing its cash budget for next year. The estimated accounts payable balance at the beginning of the next year is 540,000. A similar question, no? So the budgeted cash payment to suppliers next year. It's only about the payment part of it. Otherwise, the details are on a similar note. The estimated accounts payable balance at the beginning of the next year is 540,000. The budgeted purchases for next year are 6,800,000, occurring evenly throughout the year. It is estimated that 75% of purchases will be on credit, and the remainder will be for cash. The company pays for credit purchases in the month following purchase. The budgeted cash payments to suppliers next year are. Quickly just present it the way we have done 121, question number 121. This time it is about the accounts payable. So the amount of accounts payable will be paid in the next year. The budgeted purchases for the next year are $6,800,000. Monthly purchases are this divided by 12. So then we have the credit purchases is equal to so cash payments PC question number 131 is again 131. RF has prepared the following sales forecast for its first 3 months of trading. Month 1, 2, 3, number of components are given. The selling price has been set at $10 per component in the first 3 months. Sales receipts are given. Month of sale 20%, plus a discount of 2%. Then 1 month later, 2 months later, 3 months later, the balance represents anticipated bad debts, which is 2%. No, so 20 plus 45, 65, 65, 70, 90, 95. So 5% is bad debts. After that, a 2% discount is given to the customers for payment received in the month of sales. The sales receipt for month 2 are budgeted to be. So let's put it for all the 3 months. We'll work out one full length question. Then we can pick out for the second month. The number of components which are sold in the first month, second month, third month, we have 1,500, 1,750, and then 2,000. They are sold at a price of 10 per component in the first 3 months. So let's calculate what is the sale value of the components. So for the first month, then second month, then third month. So it is simple, is equal to 1,500 into 10. Okay. After that, the receipts part of it has to be taken care of. Sales receipt, um, receipts in the month, the same month. Of course, they are asking only for month two. Let's do it for all the months. month 1 collection. So month 1 collection, in the same month, within the month of sale, 20% of them will be paying that. So it will be 15,000 into 20% into, they will pay only 98% of the cash amount because they have to avail a discount of 2%. So month 1 sale, within the same month, 1 month later, 45% of them will pay. So into 45%. Then we see in the third month, three months later, 5%. Then let's calculate it for month 2. Because the question is asking only till month 2. Maybe we just have to calculate it only till here. Are these the answers? The answer for the second month will be this one. They're asking only for month 2, no? 10,180. Okay, let's get back to the PPT and check what are the other topics. Preparation of budget. Start with key budget factors. First step, we start with sales budget. After the sales budget is prepared, then we have the other functional budgets like the purchases, the production budget, purchases budget, labor budget, overhead budget. Then under the operating budgets, we have other budgets also mentioned like R&D, administration, selling and distribution. These are all the budgets which are prepared at an advanced level. When we learn about the concept of budgeting, we learn about what is cost of sales budget, Then little later we also will look into what are the budgeted income statement prepared with the operating budgets. Then we move on to the financial budgets. Financial budgets, one is capital budgeting, second one is cash budgets, and from the exam kit we understand that only one part of the cash budget is included into one question, because these are MCQs. A full length cash budget wherein cash receipts, cash payments and the financing part of it is not included. So if you are doing anything like that, so one full length problem has to be touched upon. Maybe I will get one question to the class and then we can see how the cash budget, including all the components, is prepared. Maybe if time permits, we can also check that. After that, once these financial budgets are also prepared, it becomes possible to prepare a budgeted balance sheet, a budgeted cash flow statement also. So that is how the complete set of budgets are prepared, and all of them included together we call the budget to be as master budget. Master budget is not any separate budget, but when it includes all the types of budgets. So the preparation of budgets is what we have looked into. How do we calculate material usage budget? It says the material purchases budget is taken as the material usage quantity, closing stock is added, opening stock is deducted, and we multiply into the what is the cost of it. What are the advantages and disadvantages of budgeting? Let's look into what are the advantages and disadvantages. See, at the beginning, yesterday at the beginning of the class, I have explained to you about what are the purposes, the purpose of it, or the advantages or the features, or what are the characteristics of successful budget. All of them talk about the same thing. The concept talks about it helps in planning, it helps in coordination, because the plan is communicated to everyone in the organization. After that, the comparison about what is the plan with what actually is implemented. So there is a possibility for evaluation. Evaluation leads to appraisal. Their performance is evaluated. Now for decision making, authority is assigned to them. When the comparison happens, it also becomes possible to control the cost. So we understand these are the purposes, these are the characteristics, advantages in any way. So when you look at what is the concept of budgeting, we first understand, we have to understand what are the advantages, the characteristics of successful budgeting, everything in that sense. So it communicates what are the goals. Plan is on hand, plan is available. Who has to implement the plan has to be communicated. So one important aspect of budgeting is there is communication. Communication is possible and communication is made. So everybody understands. So the goal congruence happens. So everybody goes in the same direction because the plan is already communicated to them. Then it considers the future period of time. It prepares for change. So anticipating what would happen in the future, of course how the anticipation takes place is the next topic what we are going to take up. So maybe in tomorrow's class, if it is possible, we can start with forecasting techniques, or coming week we can start with what are the forecasting techniques. How do they plan for the future? What is the way? Do they write any figure into the plan, or there is some scientific method or appropriate method in which the amounts are prepared, included into the budget? So there is a preparation for the future and prepared to change, and it improves the decision making. And because it also acts as a motivating factor, because um, constantly the implementation is monitored, and from time to time there is control measures to correct the deviations. And when the performance is up to the mark, up to the standards, up to the plan, in that case they are also considered for appraisal. If they are appraised for their performance, that acts as a motivation. It can be taken right from the time of preparing the budget, because a feedback is collected from various levels of management, so they contribute to their feedback towards the preparation of budget, and finally when that is implemented, then also they feel motivated because they are appreciated for their work. So these are the advantages of having a budget in place. What are the disadvantages? It's a time taking process, time consuming process. Then there is a possibility of manipulation when the feedback is collected from various levels of management, because they understand that in future, based on their performance, they also would be evaluated. Because of evaluation, they do not contribute the feedback in terms of the right standard amounts. Very loose standards or very easy to achieve standards are contributed as feedback. So that, so when they contribute little easy ones as standards, and it becomes easy for them to achieve that. They don't have to put in their hard effort, but yet they can be appreciated well and appraised for their performance. That scope is possible when the feedback is collected from various levels of management, and that gives it scope for manipulation. Encourages short termism, that is because budget is prepared for the current period but the very next period, so all focus will be on that year. Sometimes in the attempt to achieve the targets for the next year, they may not focus on the long term goals. So if they are very focused on achieving targets for the next period, high profit amounts have to be achieved or something like that. If their focus is only for the current period, the very next period, there that may be affecting the long term demand of the organization. So that situation is called as myopia. They can only look at the immediate future, but they do not see what impact it will be there on the long term. Okay, so encourages short termism, encourages overspending, can deter innovation. So they're only focusing on based on what is the plan they take up things. They cannot think anything in an innovative manner to accommodate, adjust to the changed scenario. They cannot become dynamic to take decisions in changed environment. Only when plan is available, they can act according to the plan. So that becomes a disadvantage here in case of a budget in place. There are some other types of budgets which we have to look into, but that we'll take it up in tomorrow's class. Okay, there are some other topics, but um, we didn't touch on overhead budget. We didn't touch on the concepts of activity based budgeting. There are few questions also there. Okay, some disturbance was there today's class, so we did not go in the order. I will start again from, I mean, look into that, and then whatever is remaining, we will touch upon them and then complete those questions in tomorrow's class. Fine? Yeah. Are you saying something?